Hmm. Hey, Lisa,
Hi, Gary.
how's it going?
It's going.
All right.
Busy day already.
Hey, Mondays are like that, right? That's a
I
good thing.
know.
All right. Thanks for participating in the chat last night. So you're already in the mortgage business?
Yes, kind of just getting started. My whole career has been in banking, financial services, so
Okay.
I understand money and how it works. And then just a couple years ago, moved over into the mortgage space.
Okay. How's that been for you?
Slow to start because of the pandemic and the rates going so high, so it got real slow. And so I've been trying to find my niche of really focusing in on something that I can build instead of just being the all around, chasing down real estate agents. I'm not for that.
I hear you.
Um, and waiting for buyers to find a house. I'd rather focus on the people who I've been trying to focus on people who are in their house and want to stay in it. So they're either refinance or they're seniors and they want to reverse. And
Okay.
those are two good niches right now. But I've always been interested in the investor side of things and wanted to learn more about the hard money loans. And so when I saw your ad, I was like, oh, let me talk to this guy and see how different this is, and maybe this is something that I could really sink my teeth into.
I think this is going to be a natural fit for you. And Harlan, thanks for coming, man.
Oh, no problem.
Appreciate you coming back through. Um, so with how your leads are coming through right now, are you self-gen everything, or are you getting any support from your broker or wherever you're hanging your license?
It's all self-gen.
Okay.
Yeah.
There, when you're going into something new like this, um, from going from the banking world into being a mortgage broker, was it always going to be, self-generated, or did you take a look at going with any other shops that would provide you some sort of over-the-top marketing?
Um, Initially, when I got on with Kind Home Loans, I was just interested in learning and sticking with them, and they were very flexible with me because I was still doing a 9 to 5. And
Okay.
then because it's been so the self gen space has been difficult, so to say the least. I've had a lot of offers from other shops, but I kind of like the flexibility of Kind, and I've really been trying to find my own lane to really drive my own business here. So that's why I've kind of stuck it out with Kind because they just let me do what I want.
Hey, that's a good feeling having that much freedom. You mentioned a couple of things there as far as who you're currently working with. One being the seniors looking for a reverse. Sometimes uh they are in the position where a reverse doesn't make sense, and maybe you have a investor client that would be looking to buy it. And that's one area where you can start to feed this side of the business.
Okay.
Something
Hadn't thought
definitely
about
to
that.
consider. Yeah. Luis, thanks for coming through. Is it Luis or Lewis?
Luis,
Luis, thanks for coming through, man.
thanks for having me.
Appreciate you participating in the chat last night and then also getting in on the school. Lisa, did you get into the school yet?
No, I didn't see a link for that.
Okay, let me get you in. So, if you guys haven't already gotten into the school group, there's the link to get in. Grace, thanks for coming through. Good to see you.
Hey, what's up, Gary? Nice to see you.
Yeah, thank you so much for participating in the chat last night. I'm hoping that you're going to get some value out of this week, and be able to see this coming through fruition in your business. What are you out there doing right now?
So I'm a part-time real estate agent and I work for the Department of Veterans Affairs. So from our Webby last night, I talked to you about
Oh, yes, that's right.
that 84,000 VA employees will be losing their job. And so like what I do for the VA, I'm considered non-essential.
Okay.
So in our buildings for sale. So we'll see what happens. But when one door is about to shut, another door opens. And from your presentation last night, Gary, I think that I'm actually going to be making more money doing what you do than doing what I'm doing now, which I audit schools.
You audit schools.
Yes, sir.
Okay. So with the real estate agent side of things, are you working with investors right now?
I am. I actually had a deal, and I just before sitting on the webinar last night, I handed it over to an agent buddy, and he's just gonna pay me 5K for finder's fee for it.
Hey, I like that.
I know,
I
right?
like
So I'm
that.
like, yep. And it was like 45 minutes worth of work.
And just imagine if you were able to do that and then say, and over the top, let me get you funded as well.
Right, right. I already talked to him about that too. And I said, hey, I'm learning how to fund deals, non-traditional deals. So once I learn this, I'd like to serve you in that capacity as well. But for now, I am being taught to be humble, right? Be humble
Okay.
and just do wholesales and just be quiet and just work in the sidelines. Yeah, I'm just really looking forward to it, Gary, because I'm also doing lead generation for short sales.
Okay.
So some of these folks, like they want to sell short sales, but their house is not up to par. They don't have to fix it. And it's either ROI or speed. So if I can't list it retail, okay, investor hat on. I cannot take this deal on or I don't want the property, then hey, find somebody who does and I will fund you. So that's the
Exactly.
dude, that's what you opened up in terms of my vision. I'm just like, holy crap, and my heart was beating so fast. And I'm like, for an Eagles fan, he's all right.
That's so funny. Yeah, it's definitely collaboration over competition. So any other agent that you have within your network, you can be a part of their deal in one way or another if they're working on the commercial or investment side.
Awesome.
And it's a beautiful thing. Yaneo, thanks for coming in here. I'm just right now. I'm trying to get to know everybody. I want to be time sensitive because I only have you from 1 o'clock to 2 o'clock here today, and then we're going to be doing the same time tomorrow. I'm putting in the chat for everyone a PDF for the study guide. This is basically the outline of what we're going to be covering throughout the week. If you guys can open up that and I'm assuming that you guys are on the computer. If you're not on the computer, then it might be a little bit harder to get access to that. And I will shoot it to you when you're in the school group. If you haven't already joined the school group, I want you guys to get over there. We have now just closed the doors on the school group being free. It's now $47 a month or 1 year for $397. So everything is now behind the paywall. Everybody, anyone that tries to come in the future is either going to have to be a part of a mastermind broker boot camp like this or some other capacity where they're investing in this experience. And I want to thank you guys up front because this is going to build out some evergreen content inside of the loan broker mini course. So the more questions that you have, the better this experience is going to be for everybody. And the more that we have the back and forth, then we can get where we're looking to go, which is everybody learning the ins and outs of this business so that they can go out on their own and start closing deals. Harlan was here for the DSCR masterclass, right?
Yes, that's right.
All right. So some of today, at least the latter portion of today is going to be a condensed version of that. The goal for today is to go over what loan brokering is at a deeper level. Last night we did the webinar leading into this week and went over the X's and O's of why someone should take this business seriously, showing them the opportunities of earning commissions and the clients who they're going to be serving. But today we're going to be talking about what this what this role actually is going to be doing, uh, understanding how to play the game and how to get a deal to the closing table. Then we're going to talk about hard money loans, and then we'll wrap up with the SCR loans. Tomorrow, we're going to go more into the marketing side, and then understanding the relationships that we have with borrowers and with lenders. On day three, we'll dive really deep into the templates and processes for actually taking a loan from application to close. And then on the last day, on Thursday, we'll be going over how to go pro and how to take this business to the next level, and do this in 46 of the 50 states. All right, guys. So before we get started, has everyone gotten into the school group, or at least tried to log in?
Yes.
All right, great. And if you guys, do you guys have the loan broker study guide that I just put in the chat? Did you guys download that? If you're not gonna answer verbally, then go ahead and put an emoji in the chat.
Yes, downloaded it. I'm at a
Yes.
Starbucks, so
Okay. All right, cool, man. Well, Lewis, go ahead and feel free to put your questions in the chat, and I'll be able to get to them. All right, so first things first, I want to thank you guys for taking out an hour each day this week to learn this business. I take this business very seriously. It's done a lot for me as far as my self-confidence in being able to work for myself on my own terms, be able to serve my family and be available to my two kids and my wife. I dictate the terms of when I work, and I work with who I want to work with because I've developed a marketing system that is $0. It is organic. I market through Facebook. I market through TikTok. I am putting myself out there, letting people know that I fund deals, and then leads and opportunities come to me. And the reason why I've positioned things that way is because I want to control as much as I can control getting to the finish line. And as a loan broker, we are serving two clients. Okay. We have our investor clients that we're trying to get money from or get money to, and we are helping them build and scale their rental portfolios and achieve the goals that they want to achieve. And then we also have our lending partners. Now, last night we talked about the golden rule. He who has the gold makes the rules. So we have to embody that in our mindset when going about this business from every interaction that we have with people. It's about qualification and then setting the next steps. Now, over the course of this week, I'm going to do my best to keep that same energy through this as well. By the end of this week, I want you guys to be to be educated enough to be able to go out there and do these deals, find clients, understand the lenders that I work with, their guidelines, and what deals would work best for them so that you guys can be expert referral partners of mine. Now, that may not be what your goal is. You can do this business on your own. I'm going to give you all of the materials and the secrets for you to go out there and do that. But what I found and what I wanted for me when I got into this was I just wanted to go out there and find the clients. I just want to go out there and talk to the investors. I want to be able to get some overview of the terms, get them the terms out, have them accept it, and then turn it over to a processor and have them close it. Worked with a broker, and I found myself finding all of the clients, doing all of the processing, closing all of the deals, and earning only 40% of the points. And for me, wanting to build a business or at least have a sales job that could allow me to have the time freedom that I want to be able to serve the clients that I like to work with, to be able to have the time available for my family, I couldn't give up 60% of the check every time. So my goal by the end of the week is for you guys to see enough value in what this role actually does so that you're comfortable charging what you need to charge to make it a profitable business for you, and see that my processing service is going to allow you to execute that for an upfront fee. If you guys can see that vision, then you're going to take this into hyperspeed. Now, obviously, we'll talk about what that looks like, and I want you to have success in this business. So we're also going to talk about what it looks like to work with me one-on-one coaching and in the elite and into the loan broker elite, where you're taking it pro. You're going nationwide with this. You're developing social media for yourself. You're developing a brand for yourself as a hard money or DSCR loan broker. And maybe you're going to transform what you're currently doing and add this on top, or you're going to have another revenue stream to be able to come in. All right. So that's enough of that. Let's break this down. So a loan broker, in my opinion, is the most important person in the transaction because they are the ones getting everyone paid. Title's getting paid, insurance is getting paid, wholesalers getting paid, real estate agents getting paid, and it's all hinging on my ability to be able to perform the transaction coordination. That's what we're doing. But we're earning more than just a TC would because we are in control of who has the money and who needs the money and relaying and getting that from one place to another. So, any questions about what we went over so far? Any hesitations? Anything like that?
No, you're doing great.
Harlan, I need you here. Thank you, buddy. Okay. So the reason why we want to focus on hard money and DSCR loans is because building and scaling a rental portfolio is the goal of many small mom and pop real estate investors. And those people all have, and there is a ready pipeline of those types of people coming out of the workforce and into the investment space every single day. So when we position ourselves as assets to those people and we can deliver certainty and provide trust in them for us to be able to deliver on what we say we're going to do, that's how you build a client for life. So when I talk to a client for the first time, I want to ask them, where are they starting from, what their goals are, why they're looking at real estate, because they're going to say some things that I'm going to advise against. There's some people that come to me and they say, I want to buy my first rental property because I want passive income. Well, if you're looking at a single family 1 to 4, the average per door cash flow when it's all said and done is $200 to $400 a month. So how many rental properties are you going to need to have in order to replace your income? And if they're making 50, 60, 75, $100,000 a year at whatever job they're at, it's a lot of doors. They're going to need a lot of capital in order to be able to handle any vacancies, repairs, and things like that. So the type of clients that we're looking to work with are potentially newbie investors, but where are they coming from? Are they out there aggressively buying fix and flip properties and they just want to BRRRR one deal a year? Absolutely. That's somebody that has at least one piece of the puzzle nailed down. That's where they are fixing and flipping properties and they just need to finish it off by refinancing. Lisa said, how can this be done without a license? It's commercial loans. Okay. Lisa, great question. Let's dive into that. So this business is predicated on the commercial lending industry, which does not have the same regulations as the residential mortgage industry. So everything that we do and everything that I do comes from a perspective of a commercial lender. back in 2017, I got licensed as a mortgage broker. You need a 75% to pass the test, and I got a 75. So I know enough to be dangerous, and I know enough about the laws to stay kosher on what we're doing. And so I stick to only working with LLCs, LLPs, corporations, and business entities to close loans so that I can stay on the commercial side. Also, all of the loans that we're doing are for non-owner occupied properties. So if someone ever tells you, hey, I'm looking to buy a property, can I get a DSCR loan for a house that I'm going to house hack? No. Can I get a DSCR loan? Can I get a hard money loan for a house that I'm going to live in? No. Can I get a hard money loan on a house that I live in currently? No. Non-owner occupied. Now, Lisa, who is a licensed MLO, she can handle those types of conversations. And what I can tell you now is if you lean in on the hard money and DSCR loan side, you're going to get those types of inquiries that are all over the place. And you having the license, you have a tool in your tool belt to be able to take care of them with other non-QM products like bank statement loans and you know, no income loans, things like that. So great question. So we're sticking on the commercial funding side. Mike, thanks for coming through. We're right now, I just wanted to get started and get everybody introduced into the group. Mike was in the webinar last night and he's in the school group. So thanks for coming on in today. All right, so we're focusing on hard money and DSCR loans because those are the readily available investors widely across America. And the way that I focus on this business is I want to do this completely virtual. I want to be able to generate traffic organically without having to pay for ad spend. I wanted this to be highly profitable, and I want to be able to serve the widest amount of people at the same time. If I tried to do this just solely in my market of the Philadelphia area, then I would be competing with every other mortgage loan officer or mortgage professional in this area. By casting a wider net and going nationwide with it, then I can pull leads based off of people that want to work with me first and then qualifying them next. And so hard money and DSCR loans allows you to have two opportunities to earn commissions from the same client, help them achieve their goals by building and scaling a rental portfolio. And the BRRRR strategy, which is widely marketed and widely used by investors all over the country, allows us to leverage that strategy and hone in on the people that are looking to execute that. All right. So that is the introduction to loan brokering. I'm going to throw up the hard money masterclass slides here. So forgive me for just a second. And if you guys have any questions, go ahead and throw them in the chat. Because we're going to dive right in. Okay. All right. So we are solving a problem for people that don't know that don't know what they don't know. Okay. People don't know that they can qualify for fix and flip loans without having to provide any proof of income, or can close in the name of their LLC, or really what a fix and flip loan is. So a lot of times what they'll do is they'll go into Facebook groups or they'll search online without a deal, just trying to find some way to get their deal funded. We can be experts at relaying the knowledge and getting paid for that knowledge by just collecting a few documents and turning it over to the lenders. Okay. So what is hard money? Hard money is a real estate investing tool that real estate investors use in order to be able to buy, fix, and flip properties, as well as buy, fix up properties to rent. They get money towards the purchase price and up to 100% of the rehab budget reimbursed to them as they go through the milestones of the project. These are short-term, quick closing loans that allow them to make offers as fast as cash. So that's an advantage to investors that are competing for properties, not only with other investors, but with John and Susie home buyers that may be a little bit more liquid and want to fix up the properties to live in there. So we're providing something that allows our clients to be more competitive. It gives them nearly 90% of all of the money that they would need to do a project as long as they qualify. Now, these are just for fixed to rent or fixed to flip properties. There has to be an exit strategy in mind because these are short-term loans. They're high interest. They shouldn't be in these loans very long. The types of properties that we're looking to work on are, like I said before, non-owner occupied. So when we're doing a loan for a client, we're making sure that it's in their business name, either their LLC, LLP, corporation, or other business entity, and that they aren't going to be living in the property for whatever reason. Because as Lisa can attest, is that once somebody's living in the property, now we're violating some regulations in the mortgage industry. We are not about that. We are not about facilitating or helping mortgage fraud in any way. But the types of properties that you can use them on for hard money, it's really almost all of them. Because you can find private sources of capital or the nationwide guys that I work with and still be able to fund single family 1 to 4 units, multifamily properties, five plus commercial multifamily that's 5 to 20 units or more, commercial properties like office, retail, light industrial, things like that. And hard money is new construction. We can use a hard money style loan to fund a new construction project. So they pay it back when they go to refinance or sell the property. Any other payments that are made are not made towards the principal. It's made on interest only. So speed is the key, not only for hard money to close, but it's also for the encouraging the effective project management. They don't want to be in these loans very long. And as a reminder, guys, the way that I phrase things may not be the exact way that you phrase things when you're relaying it to your clients, but the message has to come clear that these aren't, I mean, I don't know who would be offended by this. These aren't loans to be f***ing around with. Because once you get into month 10, month 11, month 12, hard money lenders aren't afraid to foreclose, put on more points for extensions, or take the house back. So when you're talking to a client about a hard money loan, it affects you 6, 7, 8, 9, 10 months down the line if they do default. That lender's not going to want to work with you anymore as long as if it starts to stack up. Remember, we got 2 clients on every deal. We have the investor clients that we want to serve. Those people are readily available. We're talking to them on a daily basis. Those people are always curious and wanting to ask questions about money. That there's an infinite number of leads for this. There are plenty of lenders, but the lenders that we work with have tight boxes so that when we find the person that fits the boxes, we can go and deliver it. And then we're focusing on a system. Cheeseburger and fries. We want 680 plus borrowers with 30% liquidity with a deal where it pencils out 70% to ARV. Does it always work out like that? No, but if we're shooting for that box and we make sure that we're not trying to consider deals outside of it too much until we get experience, then we can be successful. So the terms that we need to understand to know how to price out a loan is going to be this letter salad here. LTV, LTC, ARV, LTARV, and DSCR. When we're talking about a hard money loan, LTV is going to basically mean the loan to purchase. Okay? The loan to purchase based on what the property is currently worth. Almost always, the purchase price is confirmed by the valuation, whether it's a full appraisal, desktop BPO, or some sort of hybrid. Almost always. And if it's not, then it's a negotiating tool for your client to go back to the seller and say, hey, listen, we did get a valuation on this thing. It's not looking right. We're backing out, or unless you can drop the price. And if they're working with someone that has a big enough problem that needs to be solved by them selling the house, then it's something that they can be agreeable to. If not, then it's just more cash that's required to close. That's because of the loan to cost and the loan to ARV. So the loan to cost is a secondary guideline that the hard money lenders use in order to determine how much money they're going to allocate for a project. The lenders that we work with have a loan to cost maximum of 93%, and that's for very qualified and experienced borrowers. But most of the time, it's capped at 90% for all borrowers underneath 10 flips within a calendar year. So, what does that mean? Well, loan to cost, first we have to understand what a cost is. So your total cost is the purchase plus rehab number. Go ahead and put TC in the chat if we're paying attention. Total cost is purchase plus rehab. All right, Grace, Harlan, thank you for paying attention. So if we have a purchase price of 100,000, and so if we have a purchase price of 100,000 and we have a $50,000 rehab budget, and the loan to cost guideline is 90%, we multiply it by 0.9. The max loan amount based off of the loan to cost guidelines is going to be 135,000. So what does that mean? If they have a $50,000 rehab budget, we take that off. Their now loan to purchase is the 85,000 over their $100,000 purchase budget. They're getting a purchase advance, a loan to value, their LTV is 85%. Emojis if you understand that, question marks if I need to run through another example. All right, Gracie. All right, Harlan. Okay. So a borrower comes to you and says, I want to buy a house to fix to rent. I want to do the BRRRR strategy. And they are trying to understand how much money they can borrow for the project. The secondary guideline that a lender is using is the loan to cost. The primary guideline is going to be the loan to ARV, and they're going to take the lesser of the two. So if they're buying a house for 125,000, okay, and they're going to do a larger renovation. They're going to do a $75,000 renovation. So now their total cost, that TC, is 200,000. Let's say they're a newbie borrower. They have this is their first one. Most of the time, they're going to have an 85 to potentially 90% cap on their loan to cost. So if we go on the high end of that, we want to understand what is 90% of the total cost. So that's the 200,000 multiplied by 90%, which is 0.9. That's 180,000. They have a $75,000 rehab budget. And that gets taken away from the total loan amount because we're trying to figure out how much the borrower needs to bring to closing for a down payment. So now they get a $105,000 purchase advance when their purchase price was $125,000. So they're bringing $20,000 down, or represented as 16%. Emojis if you guys got that one, because I want to move to LTARV, and you'll see how we can get to 90% loan to purchase every time. Lisa's got it. All right. Harlan, did you get it? As far as loan to cost?
Yep, gotcha.
All
Yep,
right,
yep.
cool. All right, so the loan to ARV, this is what actually matters. This is going to be the primary guideline because we may have, okay, Mike. Well, this is going to be recorded at some point and put in there. So if you have any questions, you know how to get me through email, and you can message me on school as well. All right. So the loan to ARV is going to be the primary guideline for every fix and flip loan, whether it's going to be a fix to flip or a BRRRR, especially the BRRRR. So this is where the lender's got to work from the valuation. That's where we have to understand what the property will be worth once it's all fixed up. So when we're collecting the documents, we're going to collect the purchase agreement. We're going to collect the scope of work of what they plan to do to the property, that 50,000 or 75,000 that I showed you in the previous examples. And then we're going to order a valuation. So it's going to come in the form of an appraisal or desktop BPO or some sort of hybrid. They're going to determine what the property will be worth based off of comps in the area of what they sold for, similar bed, bath count, style of house. And I think we'll probably be able to get to that either tomorrow or on Wednesday on the deal analysis. Um, Hold me accountable to that because that's extremely important to make sure this business can actually work for you. Okay, so we're looking for the after repair value of the property. So in both of those scenarios, I used easy numbers for us to understand: 100,000 and a $50,000 rehab, 125,000 a purchase, and a $75,000 rehab budget. Those represented the total cost. The ARV, we have to make sure. Let's go with that second example: $125,000 purchase and $75,000 rehab budget. The max loan to ARV is most nearly never going to exceed 75%. So, in order to quickly know how much to quickly evaluate a good deal would be if the purchase and rehab number, that total cost, is underneath 75% of the ARV. So to quickly do that, we divide by 0.75. So we would hope to be seeing an after repair value of $267,000 or more. Then we're going to fall to the loan to cost guideline. Anything. So let's work with this here. The loan to cost guidelines. So how much can they actually borrow? Well, the down payments towards the purchase price is going to be anywhere from 10 to 25% for newbies based off of their credit. The max loan to cost is going to be ranging anywhere from 80 to 90%. 100% is going to be rare, but there are 100% lenders out there. In my lender network, I don't use 100% funding lenders because a lot of times their points, fees, and interest structure makes it worth, doesn't necessarily come in so that the value allows the borrower to be more profitable. It just allows them to use less of their own money, which sometimes that's the case. Sometimes that's the priority of some borrowers. For me, I like to see them make money and have skin in the game. So they're going to take the lesser of the two. So if we find an ARV of 250,000, then the max loan amount based off of the loan to ARV is going to be 187,500. So in that same scenario where the purchase was 125, $75,000 rehab budget, that's 200 total cost over the ARV. All right, now we know already we got 12,500 that's knocked off from the total cost that they're going to have to bring towards the down payment. Okay. $75,000 rehab budget. Now, what are they bringing? They're bringing 90%. So the primary guideline that we're always going to be looking at first is going to be 75% loan to ARV. Secondary guideline for it not to exceed is 90% of the total cost. Let me know if you guys need me to review that even more.
I have a quick question for you.
Sure, Harlan.
Uh, do you find, or is it just in your role as the broker, that although the people qualify for both functions, they do the loan to ARV as well as the secondary one, the loan to cost, but they still fall short with having what they need to bring to make the difference? Do you run into those instances?
Yeah, so upfront, when we're talking to a client, we absolutely want to understand how much cash they have access to. And
Mm,
so part of the qualification process is uh, asking them straight up, how much cash do you have on a bank statement and or have access to through lines of credit,
mm,
JV partners, otherwise, rich uncles, whatever. Later on in the week, we're going to talk about the how we can help our clients fill that gap and being able to help them go over the top. See, with the underwriting of the fix and flip loans, I work with three of the lenders that we're working with right now: Loan Funder, Kiavi, and National Loan Fund. Do not require bank statements to be provided as part of the underwriting up front. However, we are going to have to show them some liquidity at least a couple of days before closing. So wherever those funds come from, as far as helping them get fill the gap between their down payment and their purchase price, we just need
mhm.
to be able to source with a joint venture agreement or a letter of explanation, and we can get them to the finish line. Two of the programs, Kiavi and Loan Funder, they don't require any documentation at all unless there's something on their background and credit report that's making their treasury departments want to see it. So if we have a clean background, no foreclosures, no bankruptcies, um, no negative impacts like that, then when we work with Kiavi and Loan Funder, we don't have to provide the bank statements. So the down money or gap funds can come from a joint venture partnership, rich uncle, whatever. But how we can capitalize on this as brokers is we can also help them get access to business funding. I don't know if you guys can see this.
Oh, yeah.
We can help them get access to business funding. So I'm a partner in a business funding company that does the credit card stacking strategy. We'll go into that more on Thursday, but that is how you really can start to stack some wins and build a client, because you're going to get them all of the money that they need up front for the down payment, closing costs, points, fees, etc. Then you're going to come over the top and help them get the hard money and then refinance them using the DSCR. So when I go up on TikTok or I introduce myself at a business meetup now, I say, "Hi, my name is Hard Money Gary Brown. My clients are business owners that buy real estate. They call me when they need money because I'm focusing on business owners that buy real estate and need money. We can do it with hard money, DSCR loans, and business funding. All right, so today we're still talking about hard money. I do want to get into DSCR. We're running a little bit behind, but we'll get into it. All right. So experience matters for affecting their guidelines on how much they can borrow. Where there are flexible credit requirements for hard money depending on their experience. So the primary thing that a lender is going to evaluate is going to be experience, credit, and cash. If they don't have cash, then they need experience and good credit. If they don't have experience, then they need good credit and cash. If they don't have good credit, they need experience and good access to cash. Does that all make sense?
Yes.
All right. So in general, the newbie tiers are going to be 0 to 3 or 0 to 2. The more experience, when we're getting above 3, that's when you're going to be in the more experienced territory, with the top level being 10 plus. And when I say these uh, 0 to 3, 3 to 5, 10 plus, that's within a look back period of 24 to 36 months. So if someone says, I used to flip houses years ago, but then I stopped before the pandemic and I want to get back into it, sorry, it's a new environment now. We gotta go from zero. We can still help them get access to cash up front with the business funding, hard money, allow them to feel that 100% experience, but we want them to still understand where they qualify at. Okay, just went over that. The only way to ensure that you're going to get funded on time is having a clear understanding of collecting the paperwork, the communication with all of the parties involved, title, insurance, the lender, real estate agent, wholesaler, anyone that has a phone number associated with the transaction. You need to introduce yourself, let them know who you are, what your standard turn times are, and so that everyone has a professional experience. It's going to allow you to earn more referrals by doing deals. And then just trusting the process. So, what are the documents that you need to collect? Sorry, we got a question here. You're the quarterback. Exactly, exactly. So here's how to get funded quickly. The documents that need to be collected. Your formation documents. That is your articles of incorporation, certificate of good standing. Both of those terms are different, varying on state to state. They can be certificate of subsistence or articles of organization, certificate of organization. You'll have to get to understand which state that you're doing business in and what they name it. But in general, you're looking for the formation documents, including the operating agreement, especially if it's an LLC. The common mistakes on a operating agreement is that they are unsigned or have been amended without sourcing. And then the third one is that they aren't including all of the schedules and exhibits at the appending area of the operating agreement. For a corporation, you need to collect similar things, but instead of the operating agreement, they call it the corporate bylaws. And then for a corporation, they file taxes differently than an LLC. So the only tax documents that do need to be provided is a K-1 so that the ownership can be verified. It doesn't necessarily matter how much money they made. All right, so we talked about the appraisals, but I'll just run through the different types. So a desktop appraisal is where a link is going to be sent out to the um, real estate agent or host or whoever the borrower getting access to the property. They're going to upload it through proxy pics. It's going to go straight to the desk of the underwriter, and they're going to perform their own after repair value. A BPO is when we do a similar process, but the lender feels more comfortable having a third party opinion, but doesn't necessarily care for a full licensed appraisal opinion. The BPO is going to cost them somewhere between $400 to $600, whereas a full appraisal, which is going to take the most amount of time and cost the most amount of money, that is going to be anywhere from $600 to $800 for the as is and as repaired valuations. All right. So we went over this last night, but I want to remind you guys of the process for loan approvals. You initially get to know your borrower. You're going to do your deal review. How much money are they looking to make? How much money do they have? What's their credit look like in their experience? You cannot move to the next step without understanding all of that. Once you take that information, you're going to be able to go to the lender portal and put it into their calculator. Once you are able to put your inputs in, then you're going to get a preliminary term sheet. You send that over for them to agree to. If they need a pre-approval letter, you'll be able to shoot over a pre-approval letter to them through DocuSign. That's what I really prefer to use. You can put all the templates in there. Yes, it does cost money. This isn't a free business. It's a low cost, highly profitable business. You will have to pay for subscriptions. So if you're not if you can't see yourself investing in the tools that are associated with the business, then it's going to be really, really hard for you to be able to accomplish what you want to do. All right. So we send, and once the terms are accepted and the contract is accepted, then you send over the full loan application so they have one place to upload all of their documentation. That is their LLC documents, their scope of work, of what they plan to do, the purchase agreement, driver's license, all of that. Voided check. Then we get the property valuation. That's going to take about 3 to 4 days if we do the BPO or the desktop. If we need to get a full appraisal done, then we should have a closing that's at minimum 3 weeks out, because it does take about a week and a half for an appraisal report to come back. And then if there's any disputes, which I've had more disputes on the full appraisals than I have on the desktop appraisals. Once we get the valuation back, we're going to get title ordered and the insurance policy. We should be doing that simultaneously, but if we got to go by one, we can. We get we collect the documents, we get it over to processing, they approve it, then you get to final underwriting and then clear to close. We only got 9 minutes here, so I'm kind of rushing through this stuff here. Um, Let me know if you guys have any questions about hard money. I don't know if we're going to be able to get to DSCR today. I want to be able to get to DSCR absolutely tomorrow. We have to. Okay. So if you guys didn't already get access to the exclusive lender guide, it is pinned in the top of the school group. Okay. So the doc is right here, and there's a video on how to use the doc. Let me know if you guys haven't already gotten access to that, because the next step here is I want you guys to go to Kiavi's website. And let me just go to kiavi.com. Okay. You guys are new to, if you're new to Kiavi, then you need to go to programs and partners, and you need to go to the broker section here, and you need to complete their application by hitting join now. It's going to ask you for your entity information, because these are commercial loans. We're closing in an entity. We're not, if you want to close loans, then you have to have a business entity in order to be able to close them in. If you try to close them in your personal name, then you're opening up yourself for a licensing issue. So we got to make sure that we're closing in a business entity. I want to make that abundantly clear. If you don't already have a business entity, then you can get one set up. One of my referral partners is ready to file. If you don't have a business entity, shoot me a message on school so that I can get you the referral link for that. For Easy Street Capital, they have a similar area where you want to get in. Brokers right here at the top. So you go to Easy Street, you go to the link in here, you go to the broker section, and then you fill out their broker registration form. Okay. They're going to contact you and they are going to assign you an account rep. Both Kiavi and Easy Street Capital are going to contact you and assign you an account rep. That is the person that you have on the inside that will be facilitating your deals to close. You're going to need to develop a relationship with them. You want to be able to make good friends with them. They're going to treat you with the same priority as they would treat somebody that they know best. If you're going to be giving them volume, they're going to treat you very well. If you hit them up once every blue moon, then they're not really going to give you the time of day. So you have to be able to navigate that relationship. Same thing here when we go to RCN Capital. Theirs is in the partner section. You want to join their broker referral program and then register as a broker. So your assignment for tonight is to get with these three lenders and get in their broker referral program and at least sign up. That's how you guys are going to take the first step because as of right now, you are all brokers. You are officially brokers. You can now intelligently talk to somebody about the BRRRR strategy, about hard money loans. Tomorrow we'll get into DSCR loans, I promise. You can talk about DSCR loans, and we can talk about what their deal would look like. What you're going to be leaning on me for the rest of the week is being able to find the right people to get these loans for, talk more about specifics on guidelines and pricing, and how to quickly evaluate a deal, collect the proper paperwork, and get paid. All right, so I'll leave this open for the last 4 minutes here. Need a biz entity before we register, right? Yes, Lisa. If you want to register on your own. Once we complete the boot camp, well, obviously we'll talk about what it would look like for you to work with me and work with my processor so that we can take over the deal for you. That's a part of the 12-week training program that you'll be having access to, but we'll get into that later on day 3 and 4. Sweet. All right, so how are you guys feeling? I hope you guys come back tomorrow.
For sure.
All right. Thanks, Harlan. Excited. All right, Lisa. This is awesome. All right, Grace. Mike, I know you're working there. Give me a sign of life. Make sure you're getting your value out of it. You too, Lewis. You're on the road tomorrow? Okay,
So,
Mike. Yeah, Lewis. All right. Sweet. Okay. By the way, guys, um, what's the Addy for support? Because I'm not in school. That's my email address, and then I will get you in. If you just request to be a member, I'll get you in. We did put up the paywall, so it's $47 a month or $397 for the year, but you guys invested in the boot camp, so I'll get you in here for lifetime. Any other questions before we head out for the day?
good job. Thank you.
All right. So make sure your homework for tonight is to at least register for those referral partnership programs. If you don't already have a business entity, make sure that you get one set up. That's imperative for you to do it on this side. Lisa, as I'm thinking about it, you might be able to get away with it with using your license. They may not need it, but you might be the only one in this group that wouldn't need a business entity. So go ahead and fill it out.
Okay, I'll try it.
Awesome. All right, guys. We'll see you tomorrow at 1 o'clock. We're gonna start right at 1 o'clock. We're jumping right into DSCR because I didn't get to can it be a sole prop entity It just can't be your name. You know what? It's worth it to try and fill it out, Mike. All right, we're going to be starting directly at 1 o'clock tomorrow. Appreciate you guys coming through today, and let's have a great rest of your afternoon. Take care.
Thanks.